Kia ora, and welcome to Monday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news we're waiting for the first indications of retail sales as the US and EU economies make their run to the end-of-year holiday season. It is this retail impulse that powers much of the global economy. Also in the week ahead, we'll get local and Australian building consent data, and the Aussies will release their third quarter 2025 GDP growth rate, expected to be 2.2% from a year ago. In the US, there'll be more catch-up official data releases, but their non-farm payroll data for November has been delayed until mid-December now. However, ADP will release its new weekly update, and the Challenger Job Cut report will still come out on time. There'll be PMIs for the US, and no one expects much change in any of this. Of special interest will be the end-of-week release of the University of Michigan Sentiment Survey. Few see any improvement there either, with it hovering around record lows. Elsewhere, there'll be a raft of PMI and trade and inflation releases from many countries. And the Indian central bank meets and is widely expected to cut its policy rate by 25 basis points to 4.25%, despite the surge in growth. Fast falling food prices mean inflation is seen as under control there. Over the weekend, India said their economy expanded by 8.2% in September from the previous year, and well above the expected 7.3% rise, and above the 7.8% growth rate in the second quarter. It was their sharpest annual growth rate rise since March 2024. India had trimmed its GST rates and increased government spending when they were faced with swinging US tariffs, and that, along with the reorienting trade, has supported consumer confidence and private investment. In late September, they simplified their multi-slab GST system, with rates for most goods falling from 12% or 28% to 5% and 18%. This change has been a big part of their boost, giving more of an effect than anticipated. And China said its official November PMIs were weaker, and their tepid expansion has turned into a general but small contraction. The main change was in their services sector, shrinking for the first time in 3 years, and joining the ongoing small contraction in their factory sector. That factory sector has now contracted for 8 straight months. Both measures would be a lot worse if they didn't have deflation in their input costs. The private S&P Global version isn't expected to vary much from the official version when it's released later today, although it may be on the more positive side. Either way, these indicators are not pointing to an economy expanding like their GDP claims. And Japan said retail sales were 1.7% higher in October than a year ago. That's a real increase, and that was very much better than the 0.8% expected and the 0.2% in September. And Japanese industrial production rose 1.5% in the year to October, an unexpected second consecutive month of expansion. And the October month also came in much better than expected. In South Korea, there was a big separation between the two sectors. Industrial production declined, and quite sharply in October, although this largely reverses the big surge in September. But their retail sales took an unexpected surge, up 3.5% from September to be 2.2% higher than a year ago. In Canada, they released their September GDP growth outcome over the weekend and their forecast for October. The picture was mixed, and they seem to be settling into a bit of a yo-yo pattern. July was up 0.3% for the month, August down 0.3% for the month, September up 0.2%, and October's flash result is down 0.3%. There is a tendency for flash results to be revised higher, though. Generally, their goods-producing sector is marginally weaker, while their services sector is mixed. From a year ago, Canada's economic activity is up 1.4%. And early reports of US retail trade over the weekend seem positive, but heavily focused online. The US Treasury 10-year yield is now just on 4.02%, unchanged from Saturday, but down 5 basis points from a week ago. And the price of gold will start today at $4,218 an ounce, up $7 from Saturday. And that is $134 higher for the week, or up 3.2%. And silver surged on Friday to a record high over $56.50. Chinese inventories have dropped to their lowest level in a decade following heavy shipments to London triggered by a supply squeeze. And a COMEX exchange outage in the US didn't help either. And American oil prices are unchanged from Saturday to be just on $59.50 a barrel, while the international Brent price is little changed at just over $63 a barrel. A week ago, these prices were $58 a barrel and $62.50 a barrel, so a $1.50 rise in the US, but far less internationally. And the Kiwi dollar is up another 10 basis points from Saturday, now just under 57.4 US cents. A week ago it was 56.1 US cents, so 120 basis points rise since then, or a 2.1% appreciation. Against the Aussie, we're little changed overnight at just on 87.6 Australian cents. Against the euro, we've held at 49.4 euro cents. That all means our trade-weighted index starts today at just under 62 and essentially unchanged from Saturday, but up 110 basis points for the week. And the Bitcoin price starts today at $91,838 and up 1.5% from Saturday. It is up 6.9% from this time last week. Volatility over the past 24 hours has been low, however, at just on plus or minus 0.9%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.